going to be moderated by Agnes, managing partner Fast Circle Capital. So Agnes, if you're in the room, kindly make your way to the stage. And a round of applause for her as she makes her way to the stage, followed by Thea Sokolowski. Hope I'm saying that right. Head of Marketing and Communications, Stitch. A round of applause for her too. We have Eric Machubu, co-founder Yixie. Also make your way to the stage. And also Florence Gingi, Senior Manager, Strategic Partnerships, Yellow Card. Not forgetting Chuka Ezenwali, Customer Engagement and Portfolio Manager, Silicon Overdrive. You're going to look at how Stablecoins is solving Africa's cross-border payment problem. So, a round of applause for the panelists. Thank you. Thank you. Karibuni sana.
Fantastic. Thank you so much. One more panelist. Yes. Great. Okay, we're complete. Fantastic. So thank you so much, everyone. And thank you for being with me on the panel here. Today we're going to get an insight from very operator-heavy panelists about stablecoins. And I mean, stablecoins have been a big topic over the last 1.5 years. Like, I have seen stablecoin decks left, right, and center. The cross-border payments problem in Africa is big. The big claim, it's expensive, it's slow, and stablecoin is solving all of that, apparently. But there also comes a lot of risks with that, and then there's also some criticism. Is it just another, is it like kicking the FX ladder basically down, FX can down the road? Yeah, so we're going to first start off with some individual introductions, and then I'll start with some questions to the panel. Great, thank you. Thea.
Great, hi everyone. My name is Thea, so I lead marketing at a payments infrastructure company called Stitch. But I'm here today because part of the Stitch group is a company called Crisscross. Crisscross does cross-border payments via stablecoin rails, but also via fiat rails. And maybe we'll talk a bit today about why it's necessary to have both. We operate in 20 plus African markets as well as globally. Yeah, excited to be here today. Thank you.
Fantastic.
Hello, my name is Eric Machubu, and I'm a co-founder at a company called Yixie. So basically what we do is liquidity provision for stablecoins. We also provide infrastructure for fintechs and companies that want to leverage stablecoins for them to do cross-border payments, or any company that wants to have stablecoins on their balance sheets. Thank you.
Okay. Hi, everybody. Florence from Yellow Card. Yellow Card is a stablecoin and digital assets provider for emerging markets. We currently are in over 35 countries, majority of those being in Africa. We also have expanded to LATAM as well as Southeast Asia in 2025. So excited to be here to talk about how we're facilitating payments for businesses and financial institutions across emerging markets.
Hi everyone, my name is Chuka. I'm the Customer Engagement and Portfolio Manager of Silicon Overdrive. So Silicon Overdrive, precisely, we are AWS partners and IT managed service providers. For me, myself, I'm also a founder of Escrow, which is an escrow system that is built on top of stablecoins, which is precisely solving a problem of immediate remittance, which is one of the problems that most escrow systems have, basically. Nice to be here.
Fantastic, thank you. So now I have a question for each of the panelists. Before we dive into stablecoins, let's first identify what are the biggest challenges you see in cross-border payments.
Okay, Cool. So yeah, I think it's not a secret that cross-border payments are very difficult, right? All of the sort of corridors operate very differently. There's different regulation in each market. There's different level of maturity in the payments infrastructure in each market. A lot of these payments can be quite slow. They can be quite expensive. There's a lot of intermediaries that are necessary to enable those payments to flow. And so, coming to stablecoin, kind of the hope is that, okay, here's something that can solve at least part of this challenge, right? And so I think, with cross-border payments in particular, I think something we have to keep in mind is that there's multiple parts of that payment that need to be initiated, right? There's the on-ramping piece, there's the off-ramping piece, all of which involve traditional banks and traditional banking rails. And so within those markets, in order for that to be able to happen efficiently, there needs to be sort of cooperation. And so I think, this is, and we'll get to this, I guess, later with stablecoins, but there's pieces of that can be solved by stablecoins and pieces of that that still need to operate on those traditional rails. And that's where payments companies, I think, come in a lot.
I think on the same, the cost and the speed at which transactions happen across the border is something to be concerned about, because in the traditional rails, there's a lot of intermediaries involved. That takes the fees very high, and that kind of steals or takes a lot of margin before the merchant, who is the receiving end, gets the value. So stablecoins are solving that problem very easily, simply because it's able to send money directly to the person that is supposed to receive that money, whether it's a merchant or it's an individual or a family member that you're sending the money to. So stablecoins are helping to preserve the value.
To add on to that, I think outside of speed and cost, cross-border payments in Africa just have been, there's a lot of uncertainty around it. You don't know when your money will arrive. You don't know what route it will take. It's very similar to trying to fly from one African city to the other. You almost have to exit the continent to Europe and then fly back into the continent. It's very similar to cross-border payments. It becomes very expensive. There is a lot of complexity that's added to that, and that's what stablecoins are solving for.
I think just one more addition to what I've been said is lack of transparency. Right? You don't know where the money is, who is holding it. You don't really have that view. And that is basically a big problem. And stablecoins tends to solve that as well.
Great. Thank you so much. And now for the more established businesses like Stitch and Yellow Card, you've been around before stablecoins emerged. What has changed with stablecoins emerging for you? Maybe we can start.
Yellow Card was founded in 2019, or at least that's when we started our operations in the continent, in Nigeria. And what we saw in 2025 was a clear inflection point. We were a B2C company facilitating buying and selling of crypto or digital assets. And then the data in our customer behavior started to change, and we saw about 90% of our transaction volume move completely to stablecoin, whether be it USDT and USDC. And we had to change our business model. So today, we are completely B2B payment company, facilitating purely stablecoins as well as other fiat currencies for businesses. So not only did we change how we operate, it also changed who we are as a business.
Okay. Yeah, so for us, Stitch started also, I guess, 2019, 2020. So we were primarily operating in South Africa as a payments infrastructure player. We serve very large businesses, many of whom operate multinational. And so, we want to be the sort of core payments provider for those businesses to solve as many of their payments needs as we can. And so one thing we started to see was, these businesses need to move money into and out of South Africa, but also other markets across the continent. And it's something that they continue to struggle with. So we sort of saw this opportunity opportunity to be able to support them with that through stablecoins. So we work with businesses like Amazon, businesses like Binance that are constantly having to take those sort of local collections that we're enabling within, let's say, the South African market and move them back to headquarters and move them back to Europe, somewhere else on the continent. And that's often very expensive, very slow. So they said to us, is there a way that you can look at helping us with this? And so Crisscross became part of Stitch, I think, around 2022, 2023. And we started facilitating those transactions and then saw just a wider opportunity for us to serve businesses in this way outside of South Africa as well.
Great, thank you. And now I would love to hear your thoughts on stablecoin deployment versus regulatory requirements. Let's start with the entrepreneurs first. And how do you see that as part of your business strategy? Like, what does stablecoin enable you to do, and where do you see you converge with the traditional system?
Okay, so with the emergence of stablecoins, right, I would say it's not a magic wand, so to say, but it sort of gives you that magical power to do a lot of things, right? Back in the days, remittance is quite difficult, right? Especially if you're doing that bridges the gap. For what I've built so far, I mean, I can see it's precisely for informal markets. People can now literally buy and sell in the informal market without having the fear of when will I get the money, because I have a stable coin built on the background of it. That was not possible prior to this time, precisely.
So I'll touch on the regulatory question that you asked. So far, looking at the regulation in Africa, it's something that is kind of coming up in most African countries. I know a couple of markets so far have regulatory framework, and the kind of regulatory framework that is coming up in Africa, especially in countries like Kenya, as we have seen with the VASP, it has quite hefty capital requirements that may cripple innovation around the industry. And that is something that needs to be thought out very clearly so that we don't kill local innovators or we don't kill local startups that are innovating around the ecosystem and just promote for multinationals or promote an environment that only multinationals can be able to survive.
Just to add on regulation, I think fintechs have gone ahead and innovated when it comes to digital payments and stablecoins. But I think now we're at a point where we need regulation to be able to scale. So we must look at regulation as an ally if you're going to scale our businesses and our operations and also serve more people, whether it be it in across the continents and beyond. I think the danger with regulation, for fintechs, we are move fast, break things. Regulation can't afford to do that because the cost of getting it wrong and breaking things when it comes to payments is very high. To be able to get customer trust, users need to be able to know that the regulator has thought through everything. So at Yellow Card, we work very closely with regulators. We sit at the table with them and have the conversations that we need to, and be able to also educate them on how blockchain works, how fintechs that are operating in this space works. And I think that's what's going to get us to the next level.
Great, thank you.
I think the original question was traditional fiat rails, right?
Yeah.
And stablecoin rails. Yeah. So, also passionate about regulation, but I would say that's less of my expertise here. So at Crisscross, we kind of have three products that we like to talk about. So we enable local collections, we enable global corporate treasury management, and that sort of FX conversion, and then we enable local payouts because the stablecoin rails are very efficient in, for example, on-ramping, but you still need, again, that local payout and that local payment partner to be able to off-ramp into those local bank accounts. So as an example, if I have someone that wants to trade ZAF, so We do a lot of work in Cameroon, which has quite a sophisticated banking infrastructure. If someone wants to trade ZAF for euros, it's quite easy to on-ramp those euros to USDT. I can, sell that USDT to the person that I want to buy ZAF from, but then that person still has to move that ZAF from their bank account to my ZAF bank account, and then I need to move that money out, right? And that's where we get stuck, and that's what's still taking a lot of time. So while stablecoins are making a part of that process more efficient, there's that other piece that still relies on those traditional rails that is still costly and inefficient, and that's where, from our perspective, we can come in to support from a payouts perspective and a local collections perspective. And I think you need both sides of that to be able to operate efficiently.
Fantastic, great, thank you so much. I mean, that touches well on the FX risks that also come with stablecoins, because that doesn't get eliminated unless everyone keeps paying with stablecoins. And let's keep talking a little bit more about risk. What other risks do you see when you build a business, especially for the entrepreneurs now here? What are the key risks that you have to manage, like building a stablecoin business? And after that, I would love to also hear a bit about what is the benefit of using stablecoins versus not using stablecoins?
I think part of the risks that I've seen within the ecosystem is where a lot of users are not aware of money laundering concerns within the ecosystem. We've encountered a lot of users or clients who receive money in stablecoins, and they're not in a position to check whether the wallet addresses that they're transacting with have been flagged for money laundering concerns. So the customers end up either losing a very substantial amount of money simply because they are not in a position to do the necessary checks for them to identify people or the institutions that they're transacting with, especially from abroad. So that's a very major concern when you're doing stablecoin transactions.
Okay.
I think one of the biggest risks is also bank dependency risk. If banks tend to cut off relationship and you're building on that, it can also pose a serious problem for us that are building in stablecoins as well.
Okay. Okay. And on the side of, I'm curious, on the side of clients, who are your clients, for example? So we give the audience also a bit of a view, what kind of stablecoin beneficiaries there are.
Okay, me?
Yeah, you can continue, and then we continue with Florence.
So, what I've built is, my clients are the informal markets, people that are doing traditional buying and selling. So not your already set up market. For instance, we have things like Facebook markets in, I think, all over the world. But I mean, in South Africa, it's predominantly what the informal market basically shops on. So now, buying and selling there has been very difficult because of trust. Now, with what I've built, it's quite easy for them to transact, to buy products from that place without worrying about, am I buying something legit? And if I pay, is my money lost? But because of stablecoin, they can buy, literally, confirm the product, are they happy with it? And it gets remitted immediately. They're waiting for 2, 3, 4 days or one month or a week for that money to be transacted.
Okay. Okay, great.
Our customers vary from the largest companies in the world, such as Visa, and also African companies, whether be it SMEs or airlines. This depends on the use cases. So there are businesses that are looking for treasury management, so in different entities across the continent. There are global companies that are based in Africa. They're collecting local currencies and they're looking to repatriate that back to their HQs. There's also a big opportunity that we've seen when it comes to manufacturing, exports, imports sector. And this is where African countries sit in. For example, the African-Asia corridor is quite big for us. Companies looking to make payments for their goods instantly. So those are some of the companies that we're seeing, whether it's be it paying into the continent or collecting funds from the continent.
Before we go on to the next one, I would have a follow-on question here, maybe to also clarify for the audience, why would stablecoins and what's the customer reality like that it makes sense to have a stablecoin-based treasury management, for example?
Let's suppose you're operating in a country like Nigeria, Malawi, Kenya, and have entities in all those 3 countries. So you're collecting Naira, keeping that in bank accounts. You're collecting Kenya shillings, keeping that in bank accounts. We're very aware of the fluctuation that happens with African countries, or currencies rather. So you are exposed to that up and down of, say, for example, the shilling. And also, if you want to move funds from Kenya to your subsidiary in Nigeria, you have to buy dollars. And there is a question of dollar availability in these countries. So it makes moving money very expensive, very hard to even acquire the dollars, but also quite slow. And that's where stablecoins come in. So we'll collect the funds for you, or we'll collect the Naira for you, and we'll pay you in stablecoins rather in Kenya. So it solves a question of liquidity, but also it makes sure that you're not losing money on the FX.
Okay, great. Thank you. And yeah, maybe a different question since we are running short on time soon. But what is the liquidity advantages that stablecoins bring to you, for example?
Liquidity advantages.
Are there any liquidity advantages?
Yeah, for sure. So with stablecoins, given the nature of stablecoins that they run on blockchain, and it's not reliant on very traditional rails whereby you will need to go through a central clearinghouse like a central bank, for example, a reserve bank, you are able to move money at almost the speed, almost instant. You are able to do transactions at almost instant kind of transactions. Even on weekends, you don't have to wait for days or for hours for approvals to happen, simply because the blockchain transactions are almost instant or near instant kind of transactions. So when it comes to pulling liquidity, it's something that is quite easy for you to manage. And in as much as you may be having operations in multiple countries, if there is demand for sure, maybe in one certain region, you are able to pull the liquidity in that region and be able to service your client quite efficiently.
Okay. And I mean, just quickly on that point, I mean, stablecoins, we mostly buy US dollar-based stablecoins. When you buy US dollar-based stablecoins, can you buy them with, let's say, Kenyan shillings, or do you have to convert to USD first?
For sure, you can go from almost any African local currency to USD pegged stablecoins.
Okay, so you convert at that point?
Yes, exactly. Okay. Instantly.
Great, thank you. Yeah, maybe let's talk a bit about what do you think there needs to happen for stablecoins to scale across Africa?
Yeah,
scale better. Let's put it like that.
I mean, I think regulation is definitely one thing. I know this gets talked about a lot, but it's true. I mean, it's very difficult when you're uncertain in one market to another, what you're allowed to do, what you're not allowed to do. There's a lot of gray area, right? And so, the sooner we're able to kind of operate with more clarity, the better. I think also there needs to be payment partners in all of those local countries in which we're operating that are able to manage, as I've talked about, the on-ramp and the off-ramp piece, right? So until that's possible, we're still going to face that kind of sticking point and that challenge at those points, right, within those markets. So, if I want to move money between Kenya and Tanzania, I can do that. For example, on the if you think about a payment, there's two sides of a payment, or two things I need to move, right? There's a data piece, which is, banks talking to each other, talking to networks, and that today is able to move very quickly. But with stablecoins, there's a sort of promise that the money part of that transaction is able to move as quickly as the data piece. And while that can happen on, the currency conversion part of that transaction, it can't happen at the other end. And so I think a combination of regulation, modernizing and digitizing those payment rails within each local market, and then kind of cooperation amongst those markets where that money is trying to move to enable that to happen is important.
Fantastic, thank you. I would love to get each of your opinion also on where do you see African governments heading towards regulatory frameworks, and is that a risk that you feel like, okay, I don't know how to manage it, or Like, how do you manage it actually? Let's start with Chuka. Yes, please. Since you were laughing, let's start with you.
I'd rather he starts because it's good.
Like, how do you look at the regulators? What are your expectations towards the different African regulators?
Okay. One thing that I would like to see the regulators in Africa do is harmonize the regulations, or at least have a way of unifying the kind of regulations that they are coming up with, so that at least once you are licensed in one market, it's easy for you to get licensed in another market, simply because the kind of operation of the customer you are servicing is almost the same. The infrastructure or the kind of offering in different African markets may be different, but actually the kind of customer that you are servicing is the same. We have the kind of same problems in Africa, whereby our currencies devalue over time. We have inflation the same way. We do business almost the same way. Yes, the market may be different, but even having the ability of, let's say, license passporting is something that I would like to see the regulators do, simply because you get a license or you acquire a license in one African market. When you go to another market, you have to start from scratch, and it's not something that is very interesting. It's also very quite costly to do all these procedures. So harmonizing that kind of licensing is something that I would like to see the regulator be able to come with.
Is it my turn now? Okay,
You kind of want to refuse the question, right? Like you're trying to.
It's sort of a very tricky question, basically. But I think what the government can actually do to improve stablecoin and to make it a mass in Africa is possibly to start backing or making the local currencies adopt stablecoins. Like, instead of pegging it against USDT all the time, or for instance, Kenyan shillings having their own stablecoin backed as well. That is one part. And also marrying, how would I say it? Enabling the bank to actually adopt the stablecoins that are compliant, basically. So, because the banks have not actually joined in the game at the moment. I think that will enable the...
Great.
From what I see.
And maybe to add on to what they've both said, I think regulators and governments need to focus more on the ease of doing business for fintechs and institutions that are operating at stablecoins industry. And today, even though in Kenya, for example, we're very advanced when it comes to regulation, it's still very hard to go and open a bank account, right? And to scale, we do need distribution. We need payout partners or paying partners. And those are banks, they're telcos. So the government needs to get to a place where they're focused on how can we empower businesses to run effectively. And I think there is a lot of momentum that's happening, but speed is also going to be a key thing that regulators need to think about.
Okay. I'll offer maybe a slightly different perspective. So taking South Africa as an example, I think they've made a ton of progress on the regulation side recently. So there's something called PEMs, the Payments Ecosystem Modernization Program that the South African Revenue Bureau has initiated. And one thing that's great about this is they're actually taking the power for the first time away from banks in terms of who gets a say as to what innovation gets to go to market. So now for the first time, innovators, perhaps stablecoin companies, fintechs can work directly with the regulators to get the approvals that they need to operate in the market. So this is a huge barrier that's been, or in the process of being removed, which is super exciting. At the same time, South Africa has really, really strict exchange controls. So now there's a sort of question opening up of, okay, well, there's control over when fiat currencies move in and out of the country. Is this now going to be in place for when stablecoins move in and out of the country, and what does that look like? And is that actually going to then inhibit and slow the process for these transactions, which kind of defeats the purpose, right, of using this rail? So it's these sort of dichotomies even within one market that we're seeing, and they have to sort of figure out what that's going to look like there. But I think it's a good blueprint for some other markets to start to look at in terms of what's possible from a regulation perspective.
Okay, fantastic. Great. Thank you so much. Is there anything else what you want to add?
Yeah, I think where it pertains to businesses or emerging businesses or startup, I think government should actually establish regulatory sandboxes so in order to test out and to experiment, because there are no sandboxes like that, and it's quite expensive. So I think that is also very, very key if we actually want stablecoin to gain more in Africa, precisely.
Okay, great. At that point, let's see if there are any questions from the audience. Yes, please. Have somebody to...
This is to Chuka. There is an epistemic gap in terms of incommensurability and market co-creation. The target mostly is the general population. And let me not use the word poor, but we come from low-resourced regions. So how are we going to ensure that everybody's hands are on deck? Because that way, it makes business sense. When many people have the knowledge and the know-how of the entire fintech system, then the uptake becomes high. So it makes business sense. But mostly when we meet in places like this, we are preaching to the converted, but there are lots of people out there who probably will not be able to get this. So how do we ensure that we co-create solutions so that there is higher uptake?
I'm not sure I got the question, though. Did anybody get it? It's very... sorry.
Short, I'm saying,
break it down
what is your take on market co-creation? Like in stakeholder engagement.
Do you have an answer to that?
So do you mean like market co-creation? In what sense market co-creation?
What I mean is this, the good products that you are talking in the space, in the fintech space. Of course, the people who are developing it are business people, and they want to make money, but maybe the people who are being targeted have no idea. Like you talked about government regulation. People will not stop innovating just because the regulation is not in place. So how do we involve these people from the word go, so that when the product is out there, then there are no regulatory issues, for example?
I think that is already happening in a way, because when you look at the current businesses actually represented here, is Yellow Card has been in the market for close to almost 10 years now, and there has not been regulatory framework in place. You know, we've been in the market for about 3 years now. There's not been a regulatory framework around in the industry. In actually some of the market regulation is not a conversation that they are having, or they don't have any framework around it already. It's now that they're formulating those legal frameworks to be able to support stablecoins and blockchain businesses. So that is something that has already been going on. So maybe how can we make sure that there's more visibility to the people who need our solutions? So with regulation now coming in the picture, it's easy for us now to market publicly and to go after the kind of target customers with ease, with no restrictions as there has been in the past. I hope I answered the question.
Great. Any other questions? Can we get the mic?
Hi. So a bit of an outsider, but active observer. So I'm kind of curious, with the Pan-African payment settlement system, available in like 13 countries and nearly like over 20 pretty soon. Do you see the stablecoin systems being able to effectively like compete with that more bank-oriented system, or will it just continue to operate in parallel effect?
We couldn't hear you.
You didn't hear me?
Yeah. You're very quiet.
I'm really loud to myself.
No.
Okay. All right. So the Pan-African payment, payment and settlement system currently supports like 13 countries with banks across that and over 20 pretty soon. Do you see stablecoin systems like competing with that, or effectively, like it's more of a bank-based system, or do you think the stablecoin system approach will continue to operate in parallel?
You want to get it, right?
I mean, I think both are necessary, right? So besides the off and on-ramp piece, I think we're also seeing a lot of enterprise businesses are choosing to still use fiat rails to send those international payments, right? There's a number of reasons why it might make sense. One example being, if you have a purchaser buying something from you in another market, they are choosing to operate on fiat rails, right? You have no choice over that. No matter how sophisticated your sort of stablecoin infrastructure is, you still have to be able to receive that payment from them, right? So I think, and then also, like I talked about with the exchange controls in South Africa as an example, operationally, it's very complex to be able to kind of operate within that ecosystem through stablecoin transactions, right? It like actually takes a lot of onus on the company that's making that transaction. And so for them, it actually just makes sense and is faster, easier, and cheaper to do that on fiat rails. So there's a number of use cases as to why it still makes sense to use like the SWIFT system, for example, versus stablecoins. And then there's a number of reasons why it would make sense to make a transaction via stablecoin. So I think for the foreseeable future, they will continue to operate kind of side by side. And then obviously there's the on and off ramp piece, which is continuing to be very important there.
Great. Do you have anything else to add?
Maybe to add something on that is we are seeing a lot of interest even in the traditional banks to want to have stable coins as part of their infrastructure, especially to power cross-border payments. So given that the existing rails to power cross-border payments is quite slow and costly, I think for local operations, a lot of institutions are still going to stick to the local fiat currencies, but where cross-border payments is concerned, they're going to have to adopt stable coins in a way.
Great, thank you. Any other questions? No? Okay, let me go back to my panel. Is there anything else that you would like the audience to know? Or you're finished?
I guess one thing that we've been thinking about that I think is kind of cool is, this idea of what like a full life cycle of a stablecoin can look like. So because we're also a payments provider, we can, for example, enable someone to actually get paid in stablecoin to their stablecoin wallet, and then use that directly to pay for things in their day-to-day life. And I think particularly in markets where their currency is quite volatile, it's something we're seeing a lot more demand for. So I can give an example of like a company like Deal, right, that pays a lot of workers in multiple markets, especially in Africa. That worker can choose to be paid in stablecoin, and then we can enable them to, for example, pay for their Spotify subscription or their Netflix subscription directly with stablecoin without having to first convert it into local currency. They can also choose to then convert it into local currency, which we can support with, or they can maybe invest it right through their wallet, their crypto wallet. So I think that is something we'll start to see a lot more of. There's even some companies, again, for example, in South Africa, Pick and Pay is allowing people to make payments for groceries in person using crypto, right? So again, you don't even have to go through that layer of converting to that local currency. So I think there's a lot more interesting use cases other than just like enterprise cross-border payments that we can think of for this, and especially in these markets where the local currency is quite volatile.
Just to add on what you just said is we have built a wallet as a service infrastructure whereby any enterprise that is thinking of having stable coins in their balance sheets can be able to offer wallet services like to their end users, as well as virtual Visa cards that accept stable coins. And these Visa cards are accepted in every market that Visa or MasterCard is able to process transactions. So there's no need for you to actually have your users off-ramp the stablecoins directly into local currencies. They can be able to utilize stablecoins directly from their virtual Visa cards with no need of off-ramping at all.
Great. Yes.
I think two things. One is stablecoins have proven product market fit, and any business, regardless of size, needs to be thinking about what's our stablecoin strategy. I really like the question around is stablecoin necessarily competing with, say, for example, banks? I don't think so. At YellowCard, for example, we've built an enterprise-grade infrastructure that banks just need to take our infrastructure, integrate into their existing rails, and they are good to go. They don't need to figure out the tech. They don't need to figure out the compliance part of it. All of that, as YellowCard, we've done for you. So we think it's going to be a partnership between traditional finance or payments partners and stablecoin or fintechs. The second thing is the real reason why stablecoins are working in Africa and emerging markets. It's because cross-border payments has been happening in the continent way before stablecoins arrived. It's just that as Africans, we kind of got to a place where we were comfortable with things as they are, as difficult as they are, with the weight. But today as a business, you don't have to do that. You can talk to businesses like Eeni that's represented here, and that solves a lot more problems for you, but also improves your efficiency when it comes to running your business.
I think they've all said the most important things, but I think I just have to say it loud that stablecoins are not replacing banks, precisely. They're enforcing financial efficiency, right? And I think banks should be willing to stop defending their inefficiency and be willing to evolve. And that's the only time trade can be more efficient. And when trade becomes more efficient, economies grow. And when the economy grows, life becomes a lot more better. Thank you.
Thank you so much, everyone. And thank you for this very pro-stablecoin panel. I think since we're very operator-heavy here, that was to be expected. So I'll thank everyone and leave it at the note. The only risk that we will see as of today is probably dollarizing all our economies and governments losing control over their monetary policy, which we should keep in mind as we build this out. That might lead to some significant regulatory backlash. Okay, well, thank you everyone so much, and I wish you great continuous program.
Thank you.
Kindly don't leave. We have a group photo. Agnes. Thank you so much. A round of applause for them as they sit down. And with that, they're going to usher in us into our next session.